So good afternoon, buenas tardes. My name is Ella Woger. I'm the Chief Operating Officer of Invest Puerto Rico, which is the island's investment promotion organization charged with new business attraction. And on behalf of the organization, it really is my pleasure to welcome you to the virtual roundtable, Building on Resilience, a conversation on the economic outlook for Puerto Rico. So why are we here today? At Invest Puerto Rico, we're very cognizant of the current global pandemic and the challenges this really represents for the economy, for businesses, our workforce, and even in the way we live. Therefore, we really wanted to convene all of you who are the key leaders within our community to share a perspective on our role in advancing business stability on the island, given the current circumstances, provide you as well with federal and local government perspective on the impact of COVID-19 to the economy, and last but not least, share how we can really work and collaborate together to continue to bring investment to the island. So to do this, we brought together partners from various recognized organizations that I would like to introduce. We will begin the conversation with Roderick Miller, Rod, a CEO of Invest Puerto Rico, who will give context on Invest Puerto Rico's role, talk a bit about the broad economic implications of COVID-19 and how we are actually pivoting our strategy to address market opportunities. Then we will hear from representatives of the Federal Reserve Bank of New York. With us, we have Jason Bram, Research Officer at the New York Fed, and Chelsea Cruz, who's the Associate Director of the Community Development Finance Team. Now, following that, we will hear from Matt Mullen, who's the Vice President of Policy Programs and Communications at the International Economic Development Council, who'll give us a brief overview of the federal stimulus measures. And finally, we have Secretary Manuela Boy on the line from the Puerto Rico Department of Economic Development and Commerce, who will join us for the roundtable Q&A portion of the session that I will moderate, where he will provide local government perspective. And finally, to close, Rod will share ways that we can collaborate moving forward. So without further ado, I will pass it on to Rod, who will kick us off.
I still can't get the Zoom to actually to show up on my screen, but I have the presentation in front of me, so we'll just go with that. So I was sharing a little about Invest Puerto Rico. We were set up by law in 2017 specifically for the purpose of promoting the island as a destination location, as a competitive investment jurisdiction to attract new business and capital investment. And in that nutshell, it comes down to, can we bring in new jobs? Can we bring in new business, create new jobs, and bring capital investment to the island? We really aim to be transformational and results oriented in our approach to doing this work. We think about this, this is vitally important because Invest Puerto Rico is a best practice among investment promotion agencies, which is that you want continuity in terms of the leadership around how you bring in new companies so that it doesn't change with every gubernatorial term in terms of the strategies and the messages, and that there can actually be long-term entrenched relationships with site selectors and corporate real estate executives. That's the model that Invest Puerto Rico was built around. And as we think about how we actually go about executing that model, what our role is in this process, we work, of course, in an ecosystem, but we work very closely with the Department of Economic Development and Commerce. And we think about this investment promotion cycle in four general functions. Number one is image building. How do we actually shift the narrative of Puerto Rico? Currently, the narrative of Puerto Rico has been a lot around crisis management, earthquakes, hurricanes, fiscal crises, governor resigning, those sorts of things, unfortunately, have really created a lot of the image around Puerto Rico. And of course, we have had a rich history in pharmaceuticals. But our transition has been, how do we actually change that narrative to talk about the real value that Puerto Rico offers, why we're a competitive jurisdiction, a bilingual market, those sorts of things. And we use that to actually generate leads and to target companies. And so we develop relationships with corporate site selectors, CEOs, private equity and venture capital firms so that they can really understand the value that Puerto Rico offers and can actually start to bring projects our way. As we do that work, there is a process of project management and investor servicing, helping them identify sites that work for them on the island, helping them to navigate processes for permitting and those sorts of things. And then after we do all of that, there is a process of aftercare policy and advocacy. And what you'll notice is under the investor servicing, and there you'll see IPR support DDEC responsibility. We work in close concert with the Department of Economic Development and Commerce. An organization like ours cannot be successful without an economic development agency at the island-wide level that's a very close partner in working with deals and servicing companies. And so as we do this work, there are three things that really undermine or that really underscore how we try to build a strong economy. Number one is we want an economy that's sustainable. So in building our economy, we don't just want to focus on near-term. We don't want to just say, oh, how can I get 1,000 new jobs or 5,000 or 10,000 new jobs today? We want those jobs to be there for the next 5, 10, 15, 20 years. And we want to fundamentally shift the position of the economy. So we want those jobs and those opportunities to be inclusive, whether someone lives in Atorrey or whether someone lives in Caguas or whether someone lives in Guainilla. We want them to have opportunities for job opportunities to actually, elevate their quality of life. And of course, we also aim to do that in a fashion that's competitive. So thinking about the competitiveness, it's basically on the face of it, we want our economy to be stronger tomorrow than it is today. We try to work in partnership with a broad array of stakeholders to champion strategic investments in the economy, to champion collaboration so that we can build a bigger pipeline of deals, execute on those deals in a way that actually fundamentally strengthens the foundations of who we are as Invest Puerto Rico. And then we are part of a broader ecosystem. What tends to happen in many markets is that there is an economic development agency, there's a chamber of commerce, there's a political leadership, and everyone's saying we are the solution. Well, the reality is that to actually build a strong economy, there's a lot of work that has to be done. And the public, private, and nonprofit sector have to work in concert around a shared goal. And so we're very glad to be a part of a really robust ecosystem here in Puerto Rico and ensure that we can work in close partnership with other organizations to manage different parts of the economic development process. How do we do this? Well, we recently completed a promotional plan, refined a promotional plan, which we rolled out in December of 2019. And what did that promotional plan tell us? This promotional plan is our strategy for how to sell the market. The promotional plan told us a couple of things. Number one, it said, you know what, you should focus on specific sectors of the economy. About 95% of investment promotion agencies have a specific sector focus. And as we looked at it, 60% of our focus are on what we consider to be our tier one opportunities. And those tier one opportunities, historically, those are the ones that we're aggressive around marketing. At the core of that is knowledge services and the industrial value chain. Knowledge services are really jobs that are tied to people and computers. In other words, they're not infrastructure intensive. These are jobs that the time frame for a decision by a company is much shorter because it's people and computers and not necessarily large infrastructure in terms of roads and energy and that sort of thing. The other piece of that tier one priority where we spend 60% of our time is the industrial value chain, which is, yes, we recognize we've had a very strong sector in manufacturing for a long time. We've had a lot of other sectors that, manufacturing has been tops. And the reality is that even as we recruit manufacturing or work with manufacturing companies, there are a variety of companies that service those companies. And those should actually be targets because we've got a proven market. So whether it's a tech company that services a manufacturing company or a law firm that offers specific types of support for certain types of companies in that industrial value chain, we're aggressive about pursuing that. The second tier of our investment, of our work, is really around supporting and building industry capacity in historic sectors and traditional sectors such as logistics enhancement and reinvention opportunities. But this COVID-19 discussion, which is around game-changing opportunities, which is about 10% of where we've historically focused, is around future disruptives. These are things such as AI, such as the Internet of Things, and such as trade policy, and of course, COVID-19. This COVID-19 is a disruptor that has changed our world probably forever. And so we have to adapt a strategy that really recognizes the new world in which we operate and move aggressively around figuring out how do we reposition ourselves in this new context. So let's talk a little bit about the implications of COVID-19 from a macroeconomic perspective. From a macroeconomic perspective, one of the first things that we notice is that it doesn't matter what news outlet, what economist, everywhere there's a dramatic reduction in general economic opportunity as a result of the coronavirus. And economic opportunity, this is essential. What this means is that whether it is the opportunity to invest, whether it's the opportunity to have a job, all of those things for this year are going down. Most agree that we are entering into a recession. Some would even argue that it could be potentially be a depression. So the impact on Puerto Rico for 2020 will mirror that of the United States. Well, the outlook is less dramatic than the Eurozone, but it's similar to the rest of Latin America and the Caribbean. The longer term, Puerto Rico's outlook for 2021 is lower than other markets because we already had challenges even as we entered this process. Although we have those challenges, we really do see that as an opportunity to pivot for the market and to think about growing our economy in a different way. What are some of the realities of the new world that we live in? Well, for one, it's going to cause people to rethink existing values, and it's going to impact economic models going forward. What does that mean? Well, whether it's where one decides to live because of the relationships that they have or because of the weather that they want to live in, people are going to make different choices because I think the recognition that life is fleeting is going to drive a different kind of values discussion around where people live. We're already seeing that people are connecting with one another in different kinds of ways. Health and health security will become the most important global issue in the coming months and years, and that's going to have impacts on insurance business models, telemedicine, and pharma supply chains. So we're going to see a lot of innovation and a lot of investment in new models to deal with those sorts of things. Experts suggest that there will be a rethink of how much any country wants to be reliant on any other country. Protectionist trade policies are coming. No country wants to say when a pandemic or something breaks out that they're dependent on China or they're dependent on another market where they don't have the potential to or don't have the influence to actually drive what goods and services make it to their people. And I also think that there is going to be, that's not only going to be about just national security, but also from an economic perspective, this shows that, over-dependence on any one economy actually shuts down opportunities in others. I've talked to CEOs around the country, and we're hearing that remote work protocols that have been established this crisis will likely extend well after the crisis is over. And then long-term disruption in business operations will cause many companies to rethink capital expenditure models in terms of the real estate that they spend, in terms of their expansion plans. For Puerto Rico, this really, as I mentioned, we were fragile prior to the crisis. So the implication of the island will be amplified without a strong, clear messaging in response. The messaging has to be strong. The policy that Puerto Rico adapts in order to respond to this has to be strong. And our business development efforts have to be very, very pointed. We know that certain sectors, such as the tourism sector, is going to be adversely impacted. Retail, other sectors are going to be heavily impacted, and so we've got to figure out how do we move forward. If there is a silver lining, I think a big piece of that silver lining is that Puerto Rico did make a decision fairly early to make preemptive quarantine measures, so the curve has been flattened. But now there's a question around when do we get businesses back up and running, and how do we do that? And how do we actually take advantage of the favorable press that Puerto Rico's had regarding our pharmaceutical production and figuring out how do we present Puerto Rico as one of the solutions to confronting this pandemic and moving forward. We at Invest Puerto Rico believe that this is a critical part of our mission, that in times when things are well, leadership is good, but in times when things are challenging, it's really when an organization and a community shows what they're all about. And this is really an opportunity for the community of Puerto Rico to move forward and show what it's all about. We think that there are 6 big things that we should be doing in order to highlight this. One is we have to underscore the message of the island's resilience throughout everything we do, whether it's business development, marketing, or our research. It's interesting. I moved to Puerto Rico in March of 2019. In July, the governor resigned, and in January, we had earthquakes. And in each case, what I saw was there was a day or two of, oh, wow, what's happening? And then 2 days later, everything was like, we've got to move forward. We've got to continue. We've heard it anecdotally from companies around the level of productivity of the Puerto Rican worker, as well as the level of loyalty. We think now is the time that markets around the globe are seeing that no one is immune to the types of challenges that risk present. And as companies think about growing their companies in that context, they're going to want to be in markets that have a proven resilience, and we've got that. Number two, we need to position Puerto Rico as a solution to address pharma supply chain challenges. Of course, we know that 14 out of the top 20 pharma companies are here. We know that 48% of our economy is manufacturing, and we've got a demonstrated capacity to perform in pharma. I believe 90% of pacemakers around the world are invented in Puerto Rico. So whether it's personal protective equipment or whether it's vaccine solutions, Puerto Rico has the capacity to perform. There are going to need to be, of course, tweaks and investments to make everything optimal. But now is the time that we can actually have much more of a welcoming ear to this conversation. The trend prior to this had been that manufacturing investment was going to China, and we know that there's going to be a huge return of this to the U.S. I think one of the things that we wisely did in our promotional plan process was to think about economic sectors that were more resilient in times of challenge, and now is the time that's really being shown. So our focus on targeting knowledge service sectors continues to be a wise decision, as we know that whether it's financial services, professional services, IT and software, or business services, they're going to continue to look for markets where they have access to caliber workforce, access, physical and technological access. But we also know that those are markets that can also take advantage of the robust incentives that Puerto Rico has and the assets. I mean, we've got a budding tech and entrepreneurial system. We've got an abundance of accelerators, incubators, and co-working spaces. We've got over 600 entrepreneurial companies in software development, e-commerce, and fintech. And we boast the second best economy for artificial intelligence in Latin America, according to Decker Frontier. So those are some critical elements of our path moving forward. We also realize that we have to position Puerto Rico as an optimal remote work location. One of the things that I mentioned earlier was that the remote working practices that were started during this pandemic are most likely to continue at some level as companies realize that there may not be the productivity levels may not be dramatically different. And what could be a better remote working location than Puerto Rico? It's a growing trend, and we've are already seeing some of that in terms of what's happening in our market with the company we helped come here called Activist Connect just in the last few months, which is essentially a call center on steroids. And we think that there are other companies. We've even realized that Red Hat, which was started by a Puerto Rican entrepreneur in Charlotte, has a large remote working population. Rosetta Stone has a large remote working population, and we think Puerto Rico is well positioned to help bring those companies here. Number 5, we want to build Puerto Rico's economic development capacity to ensure greater deal flow, more conversions to transactions, and more efficient processes. What we know is that for a very long time, economic development has been makeshift, and there are a lot of different pockets of groups doing work. We've got to figure out how do we actually create capacity in the marketplace. In most places, about 80% once a project gets to about 80% completion, you can normally pass it off to a municipality. Many of the municipalities in Puerto Rico have never had that kind of economic development capacity, so we're finding that the ability to do that is somewhat limited. Or another example is most markets have a broker and a real estate roundtable that has a real estate strategy or an agenda for the marketplace. That really isn't as established in Puerto Rico as it is in other markets. So we're going to have to build that capacity in order to make sure that companies that consider coming here have a turnkey process. And then last but not least, we have to position Puerto Rico as a hub of talent, innovation, and entrepreneurial activity through talent development, retention, and attraction. Unfortunately, Puerto Rico has shrank from about 3.8 million people in 2010 to about 3.2 million people today. The number one driver of investment decisions by companies is access to people. Can I find qualified people with the skill sets? And what we know is that Puerto Rico is a net exporter of talent, whether we look at the University of Puerto Rico, Mayagüez, the Politecnica, or any of the other institutions. By and large, young people are saying, you know what, I would like to stay in Puerto Rico, but if the opportunities aren't here, I'm going to have to look at leaving. And so we want to focus on how do we actually create the linkages between the private sector, between the institutions of higher learning here and higher learning abroad, to say that, you know what, if you want to build a career, if you want to build a life, and a place that matters and where your being there matters as a young entrepreneur, as a young business executive, Puerto Rico is the place that will allow you to do it. So with that, I'd like to, say thanks to everyone for coming and share a little bit about our partners. We're very excited that, these three partners have decided to join us for this conversation. The Federal Reserve Bank of New York has been on the island for a very long time. Many may not know this, but of course the Federal Reserve sets monetary policy, and Puerto Rico is actually part of the New York region. And they've been doing a lot of work around increasing access to capital and building up the capacity of our local financial institutions, from cooperativas to others, so that there's large access to capital in the marketplace. We've got Chelsea Cruz and Jason Bram from the Federal Reserve with us. We've also got, at the International Economic Development Council, Matt Mullen, who leads their government affairs. And the International Economic Development Council is the industry association for economic developers, which also has a very long and rich history with the island of Puerto Rico, sending experts here after disasters to work with us, providing support to groups like Invest Puerto Rico, to groups like Primex and others. So they've been a long-standing partner. And of course, I'd be remiss if I didn't mention el Departamento de Desarrollo Económico y Comercio, the Department of Commerce and Economic Development. The Department of Economic Development and Commerce, led by Secretary LaBoy, has really been the driver in ensuring that Invest Puerto Rico got off to a strong start, and they are a critical partner in the long-term success of the island. With that, I would like to pass it off to our partners at the Federal Reserve to share more with you about their work and what they're seeing in terms of the forecast for the future.
Okay, so thank you for inviting me to participate. I'll try to be fast so we can leave a lot of time for discussion. I just have basically a few slides to go through, and then I'll share my thoughts about the situation and the economic outlook in Puerto Rico. Okay. So I'm going to show a few slides about the Puerto Rico economy, just to because there weren't that many indicators out yet. Let me start off by saying a couple things. First, the views I express are mine and not necessarily those of the Federal Reserve Bank of New York or the Federal Reserve System. I tend to be a little bit more optimistic, especially right now, than most people. So hopefully that'll be that'll give some encouragement. I'll explain why that's the case. And as Rod mentioned, Puerto Rico's a part and an important part of the Second Federal Reserve District. A lot of people don't realize this. Let me start off just quickly explaining what the Fed is doing. And I'm going to do this in a very superficial way in most cases because I'm not, there's a lot of experts that are involved in all these things. So if you have specific questions about them, I probably won't be able to answer them. But basically, the Fed has created a number of facilities that provide liquidity to a range of markets. One example of that is the Main Street Lending Facility. And there are others. We're working on lending to states and municipalities, and as we know, Puerto Rico is not counted as a state, and so we want to make sure that Puerto Rico gets into the mix right now, because I think as of now, it's so far I think it just covers states, but we're very aware of Puerto Rico's fiscal stress. Second thing, of course, is just implementing monetary policy as directed by the FOMC. This involves interest rates and so forth. Outreach, supporting communities in the second district, like how many municipios are there in Puerto Rico? 70, whatever. And I think Chelsea will be able to talk about that. And I'll talk about the research. So what we're doing is really monitoring and analyzing the economic effects and the sort of progress in a bad way, of the coronavirus spread. So we're using business surveys to get sort of real-time data on the economic effects. Unfortunately, we don't have a business survey in Puerto Rico, but we do have people that we're talking to on the ground in Puerto Rico. So we are getting some information down there. Monitoring incoming data on jobless claims and employment, and I'll talk about that in a moment. Those are really, jobless claims are the one indicator that we've started getting. And then of course, monitoring incoming data on the COVID-19 disease to better understand it, how it spreads, how widely it spreads, trying to get a sense of, when and where things can reopen and so forth. And then of course, using economic research to gauge possible scenarios. So we have some of our top economists are working on modeling the spread and so forth. Now, so as I mentioned, the only real hard data we have so far is weekly initial jobless claims. And I'm sure anyone who's watched the news knows that has sort of surged nationally, and it's surged much more sharply than it did during the Great Recession everywhere, basically throughout the United States. So what we found is we did a blog post last week that sort of emphasized that really looking at the Great Recession is not the way to look at this. It's more like a natural disaster. So kind of like Hurricane Maria or Hurricane Katrina in New Orleans, and it actually looks nationally more like Hurricane Katrina, which is bad, but it suggests that once things recover, they start to recover. So what we've done here is we've plotted the gray line you'll see in this chart shows the cumulative level of jobless claims. So basically over the past 4 weeks, we've seen almost 180,000 new jobless claims in Puerto Rico. And then if you look at the blue line, or I'm sorry, if you look at the orange reddish line, that's Puerto Rico after Hurricane Maria. Claims were slower to develop because there were problems with power and communications, but you can see that it built up to, 60,000 was a pretty high level, but this has been much sharper. And part of the reason for that, I think, is also that after Maria, a lot of people couldn't, find their way to the grocery store or, contact their neighbors, let alone file an unemployment insurance claim, for weeks and months. So this may have, drawn out the whole process of jobless claims. But, you can see that it's been more sharp in Puerto Rico than nationally, and that's probably because Puerto Rico was more aggressive in shutting things down early, which I think will be a good thing. 180,000 is about 5% of employment in Puerto Rico. I'm sorry, 20% of employment in Puerto Rico. So in theory, what this means is that, 1/5 of Puerto Rico's jobs have been lost, but we found out from the past that these don't translate 1-to-1. But nevertheless, I think this will be a steeper job loss than after Maria, based on any measure, but it might be quicker to come back. But, obviously trying to predict, how quickly we'll get this under control is something that's very speculative. Now, I just wanted to show one more chart. So here's one of my positive things. So as you know, Puerto Rico's pharmaceutical and medical manufacturing industry has shrunk a lot over the years, especially after 936 was repealed, but it still remains a very, very big industry. And so, for example, it accounts for about 8 to 10 times the national share of employment. So it's much more concentrated in Puerto Rico than it is on the mainland. And the reason this might be relevant is that when you think of goods that are likely to be in greater demand, in the midst and after this pandemic, medical equipment and supplies and pharmaceuticals are probably high on the list. And so in a sense, Puerto Rico may be well positioned, at least in this one sector, to, do what has to be done to address the coronavirus. Now, let me just, stop sharing my screen for a moment. Okay, so I just want to mention a couple other things that I think are relevant. And again, my opinion is not those of the Federal Reserve Bank of New York. But some of the concerns that we have, obviously, with respect to Puerto Rico in this situation are fiscal stress. You know, Puerto Rico's already been under tremendous fiscal stress, and now every single state and municipality in the country is facing fiscal stress. But because Puerto Rico started out in a more difficult situation, that's obviously a concern. Another concern is the density and poverty that you have in Puerto Rico, because some of the hardest hit areas and people throughout the nation have been in poor, densely populated areas. So that's a concern. Another concern is the informal economy. If to the extent that Puerto Rico has a larger informal economy, when you go to file jobless claim or when you try to get assistance or aids or loans, if you're part of the informal economy, you're just not going to be on the radar screen, and it's going to be much more difficult, I think, for businesses and people in that area. Other concerns are healthcare, and from what I've heard, not really enough testing. I mean, that's true nationally, but it's certainly true in Puerto Rico that it's been difficult to get tested for the coronavirus. So that's the bad news. Now, I think there are a lot of hopeful signs. One hopeful sign, I think, is the fact that there's just been a very low spread in Puerto Rico. If you look at the number of cases per capita, it's lower in Puerto Rico so far than in any of the 50 states. Now, part of this is because the rate of testing has been a bit lower, but I think there are other factors too. Also, this is despite the fact that Puerto Rico is one of the most densely populated parts of the United States. And despite the fact that it has close ties to New York City. So you'd think when people leave New York City, where are they going to go? Well, one of the places probably a number of people have gone is to Puerto Rico, and yet the spread has been, relatively mild thus far in Puerto Rico. Obviously, the fact that Puerto Rico was more aggressive in quarantines and in shutting things down and in curfews may have been a factor, but I think another factor may be climate. So Puerto Rico, as you probably know, is the most, I don't know if this is a word, the most tropical location in the US, with the possible, I guess, exception of the Virgin Islands. And there is evidence that weather and sunlight doesn't, wipe out the pandemic by any means, but it can be beneficial to slowing or limiting the spread. And so I think this is an interesting thing. Also, Hawaii, which is also more tropical than most of the United States, is also had a very low rate of spread. And so the fact that Puerto Rico is in a tropical climate, the fact that it's an island, that you have at least a little bit of control of at least checking or interviewing people as they're coming in, that can, it's not like people going from New York to New Jersey is just very fluid. A lot of people worked in New York, lived in New Jersey, so it spread to New Jersey very quickly. Puerto Rico, because it's an island, has a little bit more control over this. Now, I'm gonna just, not to sound overly optimistic, but Rod said, I think, what would be a better remote working place than Puerto Rico, to the extent that, this changes after the pandemic. When I say changes, I don't mean like nobody's going to be going to work, but at the margin, I think there'll be a lot more acceptance of telecommuting and doing things remotely, not because people want to. Like, I think people are still going to travel as much as they used to, but the point is people realize, oh, we can do things this way. And so I'm going to try to convince the New York Fed to let me work from Puerto Rico for 1 month out of the year, but we'll see how that goes. But I do think that, come the winter, there's a chance that in the back of people's minds, to the extent that climate can at least be at the margin, affect the probability of spreading coronavirus, suddenly makes Puerto Rico a somewhat unique part of the United States. It's much more tropical than Florida. It's hotter, there's more sunlight and so forth. And, I think it's quite possible that this may, again, not a prediction, but it certainly puts Puerto Rico in a more enviable position in terms of attracting both business visitors and especially during the winter time, leisure visitors. In fact, I'm a little concerned that, to the extent that the pandemic fades a bit during the summer and then comes back in the winter, you may actually have a lot of people trying to get to places like Puerto Rico. So anyway, I'll wrap it up there. But I just think there's a lot of hopeful things that, obviously this pandemic is obviously a very bad thing, but it may put Puerto Rico in a relatively good position on a number of areas. So I'm going to stop there. Someone else can take charge.
Thank you, Jason. We'll pass it on to Chelsea now.
Absolutely. Good afternoon, folks. Let me know if you have any issues hearing me. My name is Chelsea Cruz. I'm the Associate Director of the Community Development Finance team at the Federal Reserve Bank of New York. And of course, I'd like to thank Roderick Miller and the team at Invest Puerto Rico for inviting me to participate in this conversation, for organizing this event. And like my colleague Jason Bram, before I begin my comments, please note that these are my views and do not necessarily represent those of the Federal Reserve Bank of New York or the Federal Reserve System. Today, I'm going to be discussing the work of the New York Fed in the area of community development, specifically as it relates to COVID-19, complementing the comments that my colleague Jason Bram just made about our work specifically related to research and really tracking the economic impact of this pandemic. We have a deep historic commitment to community development and outreach. Reserve banks across the country have teams dedicated to community-based work. And the New York Fed is responsible for advancing this work, as we previously mentioned, in New York State, in Northern New Jersey, in Fairfield County, Connecticut, Puerto Rico, and the U.S. Virgin Islands. And our focus on community development began with the enactment of the Community Reinvestment Act. As one of the regulators of the CRA, we were remain keenly interested in understanding how financial institutions are meeting the needs of low and moderate income communities and how they're investing in community development projects. And over the years, the mandate has evolved. It's become more broader, and it's expanded to engagement programs and applied research and the creation of resources and tools to advance economic resilience and mobility of underserved individuals and communities. And the New York Fed works to achieve this goal in a couple of different ways. We connect community organizations to resources, we bring stakeholders together, and we try to serve as catalysts for action. And never has this work been more critical, I should think, than during the COVID-19 pandemic. One of the first initiatives we focused on in response to COVID-19 was the development of a resource hub on the New York Fed's bank website. Community development staff worked together to stand up an online resource center where individuals and businesses and nonprofits could find what was available to them at the federal, state, and city level. Obviously, there is an excessive amount of information and thus a lot of inquiries about the various kind of programs and resources available to communities. And we did our best to try to disperse this information in an organized fashion. So some of those topics that we highlighted on our resource hub are CRA and regulatory guidance, employees and workers, financial counseling, credit protection, health and safety, housing, nonprofit and community organizations, small business, and then we highlighted some volunteer opportunities that we thought were really important in kind of addressing the frontline issues that were emerging as a result of this pandemic. And we regularly update that hub, so I encourage you all to take a look. And we're always interested in hearing feedback, so if there's any particular resources that you think would be important to add, please let us know. But that resource hub is available at www.newyorkfed.org/COVID-19, one word, and we're happy to provide that following this discussion. In terms of broader outreach of the team, as I mentioned, the Federal Reserve has had a long-standing commitment to the community, and we really tried to scale our outreach and, where possible, curate the work that we were doing in response to COVID-19. So we leveraged key relationships and partnered with organizations to collect up-to-date intel on economic conditions, again, as my colleague Jason Brown described, For example, the bank had an existing community advisory group comprised of leaders from the nonprofit, foundation, anchor institutions, and that includes Eduardo Carrera, the president of the Boys and Girls Club of Puerto Rico. And that advisory council met pretty early on March 24th with President John Williams and other bank leadership to discuss the impact of the coronavirus pandemic, specifically on underserved communities in our second district. And then we also had a number of pre-existing tools and initiatives that we've adjusted to address some of the top line issues emerging as a result of the pandemic. We released our early analysis from the Fed's National Small Business Credit Survey that was fielded in late 2019 to take a closer look at cash reserves at the end of 2019 and the ability of businesses to weather an emergency. And it'll come as no surprise, but our analysis found that at least 1 in 5 financially healthy firms had sufficient cash reserves to continue normal operations for only about 2 months in the event of a revenue loss. And I think that reality is being spotlighted as part of this pandemic. And we also recognize the need to develop new analysis and partnerships. So we created a series of maps that help to locate the communities that are most vulnerable to COVID-19 across the nation. And in the Federal Reserve Bank's second district, specifically in New York City, and those maps are now available on our website. And our team also partnered with Invest Puerto Rico on a survey that is currently in the field to collect intel on the economic impact of COVID-19 in Puerto Rico. We've had a special focus on Puerto Rico, certainly before the hurricane, but we really deepened our focus following Hurricane Maria. And we had an extensive number of initiatives related to supporting the cooperativas and supporting the nonprofit community by increasing CRA-motivated capital through a program called Investment Connection. And we understand that Puerto Rico has been dealing with a succession of really devastating events, and the resiliency of the island is honestly just remarkable, and I would really support Roger Miller's comments on that. But we partnered with Invest Puerto Rico on this survey, and we know from early results of the survey that a majority of respondents do expect job losses, some temporary, some permanent. We also know that about 30% of respondents reported that they expect losses of more than $50,000 in revenue over the course of the pandemic. And of those that responded, 70% confirmed that they would be seeking financial support. And unfortunately, those respondents also expressed concerns regarding the ability of existing support through the stimulus funds and their ability to access relief funds for their various needs. And that kind of led us to focus on intermediaries more broadly and access to capital. As part of our work in the community development finance space, we are keenly interested in the role of intermediaries and how they ensure access to capital for low-income communities. And those intermediaries include banks, CDFIs, nonprofits, philanthropies, and economic development agencies. Regarding banks, the Federal Reserve, the FDIC, and the OCC released a supervisory statement on March 19th, providing guidance that the regulators would consider retail banking services, retail lending activities, and community development activities that are responsive to the needs of LMI communities impacted by COVID-19. And this statement is effective through the 6-month period after the national emergency declaration is lifted, unless extended, and it could possibly be extended by regulators of the Community Reinvestment Act. I think that's important to note because as I'm seeing some of the questions come through, banks obviously have a critical role to play in engaging in existing stimulus programs and ensuring access to capital. And I think very importantly, ensuring economic resiliency and providing support for broader economic development initiatives after the worst of this pandemic has ended. Banks, following kind of a typical playbook that we see following a natural disaster, are primarily concerned with compliance and providing an accommodative retail lending and service environment for their existing customers. But many banks also immediately began to stand up funds to support nonprofits and to support, again, some of these frontline issues that were emerging. And they also are working to deepen their partnerships with other key intermediaries like CDFIs. I think CDFIs have emerged as kind of a critical player in ensuring that we can fill some of the gaps that we're seeing in terms of access to capital, particularly for very small businesses, minority-owned businesses, and communities that are typically underserved. CDFIs have always played a really historical role in filling those gaps. And we recently published an article on the New York Fed's Medium channel, which describes that critical role that CDFIs and credit unions play in support of small businesses and low-income communities. So I encourage everyone listening to review that article. Again, that's currently on our Medium channel. In that article, we included original analysis based on the data from the 2019 National Community Development Survey of Financial Institutions that we put into the field for the first time last year in 2019. It's a convenience survey. It had about 557 total eligible certified CDFI respondents. And that included 91 financial cooperatives that responded from Puerto Rico. And obviously cooperatives are really critical players in many communities through Puerto Rico. They serve a significant amount of the population. And I think the sample that we had represented about 73% of the sector. So we had some really interesting takeaways about the role of cooperativas. And then, thinking a little bit more about intermediaries and how the Federal Reserve Bank of New York and the Federal Reserve System can really lean in and think about our role in addressing some of these issues, we developed a WebEx call that we're going to be hosting tomorrow, actually on April 23rd, focusing on the role of the Fed in Main Street. And that conversation is going to discuss how the coronavirus pandemic has disproportionately affected low-income communities, including communities of color, the current and imminent funding gaps for some underserved segments of the population, and the critical role that, again, community development financial institutions and other socially responsible capital providers can play in supporting an equitable economic recovery. Now, fortunately, that WebEx is, I think, already at capacity, but we are going to be recording that conversation, and a video of that conversation will be made available on the New York Fed's website the following Monday. So pretty quickly available for wider distribution. And really the purpose of all of this work is to really collect intel on populations that are at the greatest health and economic risk, and to help inform local policymakers, nonprofits, and other stakeholders that are focusing on mitigating the worst effects of this pandemic. And certainly we're always interested in how we can play a more impactful role. And again, I think particularly lifting up underserved communities, small businesses, and other segments of the population, and making sure that what we ultimately see is an equitable economic recovery, and that we have an opportunity to think a little bit more innovatively and maybe build back better, which I think is the broader conversation that's happening in Puerto Rico right now. So those were my comments. I tried to be as succinct as possible. I know that was a lot of information, but as Jason mentioned, we're happy to answer questions during the moderated portion of this discussion.
Thank you, Chelsea, and thank you, Jason, for your perspective. I'd like to pass it on now to Matt Mullen from the International Economic Development Council. Matt?
Good afternoon, everyone, and thanks for being with us today, and thanks for including IEDC in this important discussion. I'm going to go ahead and share my screen here. There we go. Today I'm just going to talk a little bit about what's happening here in Washington. It's been an eventful last several weeks. Legislatively speaking, we've seen a number of just unprecedented is a word that is definitely being overused these days, but it's been unprecedented in terms of the scale and scope of legislation that's been coming out of Washington. Just really quickly for IEDC, as Rod mentioned, we are the world's largest association representing the practice and practitioner of economic development. We're a 501c3 nonprofit. Importantly, we are very nonpartisan, and we cover a broad array of different services for the economic development community and stakeholders, including courses, certification, research, technical assistance, conferences, and advocacy. So from Washington, we've seen 4 major pieces of legislation related to the COVID response starting on March 4th, which was an initial federal response effort of about $8.3 billion that was quickly followed by, on March 18th, the family leave, unemployment insurance, SNAP benefits, and Medicaid bill, again on the 18th. And of course, this was all followed up at the end of the month on the 27th with the CARES Act, which was $2.2 trillion in many different pots, ranging from direct assistance to individuals, assistance for small businesses, assistance for hospitals, direct assistance to local government, and an expansion of unemployment insurance. Just yesterday, the Senate passed the 4th bill. The House has to take this up and are expected to do this in the next couple of days. The Speaker of the House has indicated support for this bill, so it is likely that it will pass. The White House has signaled their support as well. It's about $484 billion, primarily an injection of additional funding for the Paycheck Protection Program, or the PPP, at SBA, which was exhausted last week. They had an initial $349 billion. They're getting another $310 billion in that program. The Emergency Industry Disaster Loan Program at SBA, which originally received $10 billion in the CARES Act, would get another $10 billion. And as a concession to Democrats, an additional $100 billion for public health, split between $75 billion for hospitals and providers responding to the COVID-19 outbreak, and $25 billion for testing. The 4th bill, as it's being called, is really more like a 3.5. This bill was being negotiated essentially concurrently with the next bill that will be of a scope and scale that's similar to the CARES Act. This bill that is being discussed right now was initially in response to a request from the administration for additional funding for the PPP program. As we've indicated, that money has become exhausted, and so they needed additional funding for it. It was, in theory, supposed to move quickly, and everyone would then move on to this next 4th bill. I think because of the timing and some of the communication on these things, there's been some wires crossed. We've heard from our own community that they're concerned that certain provisions that the economic development community has been advocating for did not get included in the bill that's being discussed right now. And that was really never the intention. And so we're pivoting now to what this next bill will be, the 5th COVID bill, CARES Act 2.0. In that bill, we are expecting to see more money for local governments, more money for testing, tracing, and treatment, more money for businesses, for individuals, in addition to many other new items that weren't included in previous COVID-related bills, such as an infrastructure investment, tax relief through payroll taxes, or any number of other potential types of tax release, potentially a jobs program. As we've talked about, we're past the 22 million people who have applied for unemployment in the last few weeks, which according to some groups, I saw some reports today that's wiped out the gains made in the last decade, which is a truly sobering statistic. So IEDC has been involved for the last couple of weeks in our discussions with the Hill. We've been doing a couple things. First and foremost, we are relentless, jealous advocates for economic development, and are committed to remaining to being the voice for our profession in Washington. We've launched a weekly or more free webinar series, which I encourage you all to take a look at on our website, on our main site. You can find it under iedconline.org/COVID-19 webinars. And then through a website that's funded through the Economic Development Administration called restoreyoureconomy.org. You can also find recordings of these webinars that we've done today. I think there's probably 5 or 6, and I think we're booked through the end of May on those. but we'll talk about more of that later. And a number of other research efforts trying to identify best practices. As Rod pointed out, IEDC has a very long history in disaster recovery and response as it relates to economic development. We have a lot of knowledge to draw from and have been pushing this information out to communities over the past several weeks, and will continue to do so. We've also moved a lot of our programming online over the last couple of weeks, as we've not been able to, like everyone else, host in-person items. Just some high points related to our legislative targets for upcoming COVID-19 legislation. First and foremost is to expand the eligibility of the PPP program to include 501c6 organizations. This is a big issue for the economic development community. 501c6 organizations are trade associations and chambers of commerce, business groups, that type of thing, which there are a large number of economic development organizations that fall under this classification. Unlike any other previous disaster or crisis that we've seen, and certainly in all of our lifetimes, in addition to there being a great necessity for funding for programs related to economic recovery, there is a growing dire need within the economic development community to support the organizations that are executing those programs. In a nutshell, like many organizations, EDOs are facing funding crises, and as economic developers are to be, sort of that leading edge in helping their communities recover, build back more robust, more resilient economies, those EDOs just might not be there. And so we have elevated for the first time ever the importance of federal assistance for economic development organizations. So our second bullet point here, we are advocating for direct assistance to economic development organizations, whole new territory for us. But it's not dissimilar from how other organizations and industries are requesting direct assistance themselves. So we are sort of feeling our way through that. Eliminating match requirements for the Economic Development Administration. So in the CARES Act, many of the federal programs that receive funding, including EDA, which received $1.5 billion in the CARES Act. As a kind of comparison, the Economic Development Administration typically receives $300 million in annual appropriations. And so 5 times their annual appropriation for the EDA to get out there and start helping communities recover. But the match requirements associated with communities and organizations receiving those funds were not waived like they were waived in many other programs. And this brings up a good point, that the CARES Act was far from a perfect bill, but it was done quickly and it was huge. And so there were always going to be required fixes that would come later after the fact. And this is one of those fixes that we're seeing. Eliminating the match requirements is necessary because communities just don't have that money to put up in order to access these EDA funds. And if they do, they surely could be used for better purposes within their communities. And secondly, the match requirement slows money down. If we can inject some certainty and clarity that the match requirements are waived for this money, it will allow it to move into communities much, much quicker. The next point here, enacting policies to encourage growth, creation, and reshoring of medical equipment and pharmaceutical manufacturing. Manufacturing has always been a high policy priority for IEDC for obvious reasons. In this particular situation, it seems abundantly clear, apologies for the dogs in the background there, guys. There must be deer or something moving through. In a nutshell, IEDC's position on this is there's a national security priority and a public health imperative that we reinvest in, the medical equipment and pharmaceutical manufacturing related to the PPE equipment and coming vaccinations and therapeutic treatments that are going to be required to combat this and to combat whatever is going to come after this. And so we've taken the position that creating an initiative through the Economic Development Administration that would provide some funding to businesses that might be able to retool, scale up, any of those sorts of things, their existing manufacturers, and then also help communities attract other manufacturers as well. This is one component of what I think should be a broader national initiative on this front that would include some labor components and some international trade components and some tax components. And so we're happy to be a part of that conversation. And then defederalizing eligible existing revolving loan funds at the Economic Development Administration. This has been a longstanding policy objective of IEDC. These revolving loan funds have money that in many cases have been there for decades. And by taking the step to defederalize these types of revolving loan funds, and not necessarily new ones, communities would be able to better leverage that funding to utilize other sources of funding and really kind of maximize the impact of it. The requirements related to revolving loan funds also are such that the reporting and everything that goes along with that are fairly onerous and might discourage communities from using those funds for the types of needs that they'd be very useful for right now, including smaller funding, smaller size loans for the small businesses in their communities. And then finally, you know, at the bottom of this list, but at the top of this list, is establishing a national public health strategy that restores our faith in our public health infrastructure. There's a great deal of conversation going on about reopening economies. You know, there's a lot of emotion involved in that, but it's backed up by need. You know, there's clearly people that are hurting economically and financially. But at the end of the day, until we have some sort of strategy in place that truly drills down on testing, on contact tracing, on treatment of this disease, it won't be possible to truly reopen the economy. And so we are advocating and adding our voice to that discussion as well, that these things be implemented as quickly as possible. And on that note, you know, the timeline for this next bill is unclear. Congress is basically not in session until the middle of May. That doesn't mean that they can't do stuff, and it certainly doesn't mean that they're not working. But it does mean that movement on the next big bill is unlikely to come for at least the next couple of weeks. And of course, as we mentioned, this is happening in the face of calls for reopening the economy. But just as much as those calls are coming, there are more calls coming saying, you know, we need to be cautious about this and take the correct and appropriate steps that are led by public health officials so that we're not back in a worse situation than we're in now. And then it remains absolutely critical that everyone be in direct, regular communication with their elected officials, both locally and here in Washington. From an economic development standpoint, even after all of our efforts, whenever you ask an elected official if they support economic development, they will almost certainly always say yes, because economic development, those are two good things, put them together. Of course, we support economic development. But when the rubber hits the road in terms of understanding the mechanics of the practice of economic development and the things that you all are doing in your community, they need a little help there. And they need to understand exactly what your communities are going through economically and what you need in order to you know, be ready when the economies can start to reopen. And you know, potentially find some opportunity in this crisis to take advantage of sort of the restart that's coming to build you know, stronger, more inclusive economies. You know, IEDC remains here to help. Again, this is the website restoreyoureconomy.org, and also references our the webinar series that we're doing. I think the next one on Monday is focused on some of the things that we're seeing from our international partners in terms of their response. I believe next week, yet to be announced, we'll be having the first of what will likely be many webinars on what reopening the economy really looks like. It's a nice idea, but it needs to be backed by tangible steps, right? So our members should be talking to their communities about, this is, what it looks like to open restaurants again, and this is what it looks like to open schools again, and those sorts of things with real step-by-step meat behind them. And so again, you can check out our website to find out more about that. And of course, get in touch with me. Here's my contact information. Please feel free to shoot me a note. It's always helpful to hear about what you all are going through because it provides context to the policy discussions that we're having in Washington inside the bubble. And so I'm happy to have those discussions with anyone in the days and weeks ahead, and I'll stop there.
Thank you, Matt, for that pointed perspective. It's always very helpful to really understand what's going up in Washington in this regard and how it could potentially impact, Puerto Rico. I do want to turn now to the question and answer roundtable now, where we'll have both Rod, Jason, Chelsea, Matt, and we have Secretary LaBoy, who is going to join us now. Now, we've gotten a lot of questions. We actually also had collected questions prior to this event, so we won't get to them all, but hopefully we'll be able to answer some of them. The first one I have here is for Secretary LaBoy. We've seen that there is an incredible opportunity to position Puerto Rico as a solution to address the pharma supply chain challenges. What effort is the government, the local government in particular, doing to address this potential opportunity? One, and are there any, what other opportunities do you see in other industry sectors?
Well, hello, everybody, and good afternoon, and thank you for this invitation. I've been listening, to the different speakers. Has been, very productive, and I really want to congratulate Invest Puerto Rico for this effort. To your specific question, let me try to reference it in terms of where we are today in Puerto Rico, right? So, as it's common knowledge, we are going through the crisis. And same as the rest of the states and territories and the rest of the world, this has severe impact to the economy of Puerto Rico. Especially in the case of Puerto Rico is an open economy. We have a sophisticated economy, a little bit more than $100 billion worth of GDP. Our exports are in the range of the $70 billion. Imports are close to $50 billion. So we are an industrialized, sophisticated economy, despite of the challenges that we've been facing over the last couple of years, which brings me to the second comment. We know that states, territories, and other countries are facing, severe economic impact. In the case of Puerto Rico, it's a little more acute because this is not our first crisis. Just a couple of months ago, we were facing the earthquakes, and actually, we're talking about kind of, with the 100-year type of earthquake, and although it was in the southwest of the island, it still caused economic impact in the form of infrastructure, the well-being of the citizens and so forth. And prior to that, let's not forget that we went through a political unrest last year, and it's one of the kind political unrest in a long time in Puerto Rico. And that also, had its consequences. And prior to that, we basically faced the 100-year storms in 2017 with all the devastation associated with that. And we were already facing other challenges, before 2017, like, the imposition of a federal law, PROMESA, the imposition of a fiscal oversight management board. There were other issues like, for example, SICA in 2016 that impacted the tourism industry. So we were, we declared bankruptcy in 2017. So this is a situation in Puerto Rico that the crisis, the current global crisis, is having a very specific impact to Puerto Rico because our economy was already under, a lot of stress over the last couple of years because of what I just said. Now, with that, and I'll basically going to switch to more optimistic tone, right? Because, going through a crisis, there's certainly, if you see the glass half full, there's many new opportunities that we can, use this crisis to pivot and put Puerto Rico in this case towards a path for economic growth and economic development. Today, right now in the crisis, we're focusing on managing the situation, which is the lockdown, the partial lockdown, and the curfew, which were necessary measures that were basically put in place back in March to address the situation of public health because of the pandemic. And of course, it's a health issue, it's a health crisis that now has become an economic crisis as well. So that puts us in the second phase of the crisis, which is how do we move now towards a reopening of the economy in a gradual way, in a way that doesn't compromise the efforts associated with public health and never compromise the capacity of the health infrastructure. That's the phase where we are today. And of course, last week, we have now the federal guidelines associated with reopening the economy. We have our own set of guidelines that we're putting together. It's a major effort between the public and the private sectors. And we are not right now heading towards that. And the reason why I'm mentioning this is because, yes, there are, a number of economic incentives and economic assistance from federal to local level packages. But economic incentives are not designed to solve the problem. They are designed to navigate the crisis. They are designed to provide oxygen and bridge the situation from crisis to recovery. So we're very grateful, and I think that the announcement that finally this deal for the second round for the SBA PPP is on the way. We have our own sets of state incentives, but these incentives are never going to address the root cause of the issue. They're meant to, like I said, provide oxygen and navigate the situation and assist in the short term the private sector. So it means that we have to move towards reopening the economy. And while we do that, we have to go back and rethink everything that we have done before. Like some of the panelists has mentioned, this is a new ballgame. This is a new world. Puerto Rico, as the rest of the world, we're facing a new geopolitical and new economic, world scenario. So we have to resist temptation to apply the same playbooks in the past. Some things are going to be applicable, but certainly we have to think out of the box, and we have to really be innovative and creative, thinking about the new scenario that is affecting the world, it's affecting the national level, and of course it's affecting Puerto Rico at the local and regional level. With that in mind, I think that certainly everybody agrees that because of how the US is moving towards national security, the way national security is now being redefined. For example, too much dependency on foreign sources of critical supplies, like pharmaceuticals, like drugs, like medical devices, everything associated with the supply chain of those industries, critical services associated with healthcare. I mean, everything that for decades, the trend was to outsource to other places, foreign places, right? Foreign sources. It's now being questioned. And there is a new trend that we need to have less dependency from national security purposes. So with that new reality, national security, what is that? What it does mean? What is that? How do we find that towards the future? I think that Puerto Rico needs to be front and center in order to capitalize that new trend and those new policies associated with national security, because Puerto Rico is part of the US. And because Puerto Rico, the people that we live in Puerto Rico, we are US citizens, and we have always contributed to the national security of the US. And because of our track record, experience, talent, and many other reasons why, Puerto Rico probably is the best place within the US to capitalize in terms of all this new trend of onshoring, a lot of activities that for decades basically moved towards foreign places, foreign countries. And now there's gonna be that trend going back to the US, and Puerto Rico should be there. And certainly pharmaceuticals, certainly medical devices. Not only that, we're talking about probably manufacturing of electronics and all the supply chain and all the knowledge services that are associated with that. Puerto Rico should be right there front and center. And probably the major obstacle in the beginning of that phase will be making sure that we promote Puerto Rico the right way, because for many cases, for many instances in many years, Puerto Rico have lost opportunities just because we were not in the table, because there's not enough awareness about Puerto Rico. So promotion is going to be key, at least in the beginning of this phase, in the short term. And certainly Invest Puerto Rico, by law, is in charge of taking the lead of promoting Puerto Rico and ensure that while those trends starts to happen, and we are in the initial phases of that, those activities going back to the US, that we promote the island and ensure that Puerto Rico is right there, to capitalize on these new opportunities. But it's not only about pharma, right? The webinar, has the title Resiliency, right? So resiliency, I know it's the new buzzword, but if we look at really resiliency, because of what I just described, all these crises that Puerto Rico had to go through have created, I think, new skills, new core competencies, and we have to ensure that we translate that into the new competitive advantages of Puerto Rico, because now we know how to manage crisis. We know how to manage crisis. The private sector is incredibly resilient with everything that has happened, the public sector as well, people. So how do we translate that into those competitive advantages in sectors like food, for example, healthcare, certainly everything associated with finance and insurance, anything associated, with the capacity, like Rod mentioned, capturing all these new trends about remote working, so Puerto Rico can become a hub for export services. All those things now need to be front and center in the discussion of Puerto Rico, taking advantage of that resiliency and translating that into actual benefits for the economy of Puerto Rico. Now, all of that is great, and I think we're going to be able to capitalize and maximize those benefits in the short term. But we have to also continue doing a lot of the work that we were already started prior to COVID-19 crisis, which is to also take care of very important foundational issues like our competitiveness, the capability to really have the infrastructure of the 21st century, address the ease and the cost of doing business, work on talent and workforce development, reduce bureaucracy and red tape. I mean, those things, we need to continue those efforts to ensure that Puerto Rico is really competitive at its foundation. In addition, of course, to other things that we already offer. So I think this is an opportunity of a lifetime. And I really believe that if we do this right, and we do it in collaboration and in strict coordination between the public and private sector and the rest of the stakeholders, like universities and NGOs, I think that we can really position Puerto Rico in an incredible opportunity for growth into the future.
Thank you, Secretary LaBoy. Absolutely agree. From a resilience standpoint, it's actually the title of this roundtable.
To Ella's point, we really do need to embrace the resilience opportunity that Puerto Rico is confronted with. And so, with that, I'd like to, ask another question. And this is one of the questions that came through. And I'll ask this one also to Secretary LaBoy. And before getting other folks involved, how has the recent natural disasters endured by the island and the exodus of younger skilled labor affected the labor capacities of the island, more specifically in the biomedical and biotech sectors?
Since 2006, roughly, Puerto Rico started a very, very negative and concerning trend of losing talent and losing population as a whole. I mean, back in 2006, Puerto Rico's population was close to almost 4 million here in Puerto Rico, 3.9. And the latest numbers are, between 3.1, 3.2 million people in 2020. So that was, of course, one of the reasons why we started, this recession and this economic and fiscal crisis, among other things, of course. Let me share a couple of, data associated with that. Positive and negative. Positive, I will say that in the case of the pharmaceutical, sector and medical devices, the life sciences sector, it has been, highly dependent on the output of our university system, specifically the engineering schools, and specifically some of the, the other schools that provide professionals associated with sciences, like chemistry, biology, and so forth. So even though we've been having this incredible difficulty of retaining talent in Puerto Rico, for all these years, there's still, and because of this characteristics and the specifics of our labor market, we've been, I would say, fortunate that we still produce enough talent to at least address the demand for that kind of labor in Puerto Rico. But of course, nobody feels satisfied with a situation like that, because the underlying issue is that we need to keep growing the economy in Puerto Rico based on talent retention, attraction, and other things that we need to do. So it is important that in addition to just depending on the university system and understanding that the university system also needs its own reforms, right? There's a lot of things that we need to do to continue improving, the education system in Puerto Rico, from K-12 all the way to, to the university as well. I will say that we are putting a lot of emphasis of the last 2-3 years in apprenticeship programs. So apprenticeship in Puerto Rico, maybe 5 years ago, was almost non-existent. When I started as secretary in 2017, there was only one registered apprenticeship, and it was in the aerospace sector. Today, because we have adopted the national model for apprenticeship in Puerto Rico, and now the Department of Economic Development and Commerce is the state agency in charge not only of workforce development, but also at the apprenticeship model in Puerto Rico. Right now, we may be close to 10 registered apprenticeships. So apprenticeship, it's gonna be very important. Not the only thing that we need to do, but an important element among other things, so we can really ensure that Puerto Rico is a place that can retain its talent, attract new talent from elsewhere, of course, including the US mainland, and be a place that, that can have the conditions for people to stay in Puerto Rico, specifically the critical talent for the strategic sectors that we're pursuing. And another thing that I think is important as part of, of this intervention is that for the first time, by December 2019, according to the US Census, Puerto Rico's outmigration stopped. So according to the data from the US Census, in December 2019, outmigration actually stopped. And for the first time, actually reported an increase in population. Well, it was by 300, that was the actual net increase, which is insignificant, but the important factor was that we stopped that trend in December 2019. Of course, after that, we had the earthquakes, and now we have the pandemic. But my point is that there were certain things that were happening over the last couple of years that we were able to somehow address that particular issue, because there's no way that we can continue moving forward and expect and achieve economic growth and sustainable economic development if we don't address the talent issue, specifically, the retention and providing economic opportunities for all in Puerto Rico.
Thank you, Secretary LeBoy. I do have a question from the audience that I'd like to ask both Secretary LeBoy and Rod. What are the top 2 to 3 priorities in your current plans to facilitate the private sector to better promote economic development?
That's a great question. I'll tackle it first, and then I'm sure Secretary LeBoy will have a lot to share as well on that. So one of the most important things, and we've mentioned it several times, is that there has to be a high level of collaboration and coordination between the public and private sectors. Part of what that looks like is open and robust and continued communications regarding what are the challenges, what are the opportunities, what are the successes that companies are having. We need to capture those stories, because as a promotion agency, essential to our ability to be able to bring more companies to the market is to be able to tell the stories of companies that are here. We also need to understand the challenges so that we can understand from a strategic perspective, how do we actually start to cut red tape and other challenges that hinder private sector growth. That's number one. That communication also includes, I think, understanding from a value chain perspective, what are the types of companies that the private sector needs here in specific industries in order to be successful. if we talk to 10 companies in the private sector and 7 of them say that they need a widget maker or that they're buying their widgets from some other market, that really represents potentially an opportunity for a target that we should go after. So this idea of ongoing communication, I think, is one. Number 2 is, engaging, and I would say it's engaging in fora such as this, but we're also in the process of launching councils in targeted markets such as New York and Silicon Valley that are private sector led, and we will also be engaging the private sector here more aggressively. I mean, one of the big realities is that there are 3 or 4 things that I would say drive deal flow more than other things, and those things are talent, number 1 through 5. And so we need to understand the talent issues and the talent realities. I mean, we envision launching, working to create an island-wide internship program, creating a talent platform, those sorts of things, so that there's a clear way that the private sector can engage to find the talent that it needs, but also that people that want to move to Puerto Rico or move back to Puerto Rico have it. And we need the private sector to engage us on that. The other elements that are really essential is real estate is a big one. What we found so far is that there are a variety of firms on the island that deal in real estate, both in the industrial and the commercial space, but information sharing seems to be very difficult. So as we go out and we sell to companies and they start asking us real estate questions and we start to connect with brokers, the inability to get the level of detail that these companies can get in other markets about the properties, that tends to be a challenge. And we're going to need a lot of private sector support to confront that. And then I think the last piece of this is that we are well aware that we are economic developers, and we are not experts in pharma. We are not experts in financial services. So as we develop our value propositions for what we go to sell, we're going to need the private sector on the island to say, actually, this is one of the most compelling reasons why Sector X is here. These are the challenges that we have. These are the things that as you recruit companies, you need to tell them about why Puerto Rico makes sense. And we need an openness from the private sector to be able to talk to some of those companies. Everything that we say as Invest Puerto Rico and as the Department of Commerce comes at a discount to the private firm because this is our jobs. But if we have private sector leadership that's willing to talk to companies that are interested in the island and help make the case for us, and we'll leave the room, that's even better. With that, I'll pass it to Secretary Lavoy.
Thank you, Rod. From the government's perspective, I will say 3 things. Number 1, it is still our job, per statute, to ensure that we continue retaining and promoting the expansion of existing companies in Puerto Rico. So strengthening that relationship and ensuring that we can really support the retention and expansion of existing partners, it is a top priority. And I'll tell you that before, this crisis, between 2017 and 2019, we have visited more than 20 headquarters between the U.S. mainland and Europe of the top companies that are doing business in Puerto Rico, just to ensure to deliver a very simple message. You're important for us, and we don't want to take you for granted. And we're a partner in this endeavor. Number 1. Number 2, certainly competitiveness. I mentioned it. We have to invest in infrastructure. We have to have a state-of-the-art 21st century infrastructure that supports the growth and more productive society in terms of economic terms. We have the means, because from crisis like the hurricanes, now we have, resources, economic resources in the form of different, grants and appropriations at the federal and state level to now invest in infrastructure, including, of course, digital and physical connectivity, and the things that are necessary, to invest in infrastructure, including public-private partnerships. And with competitiveness also, like I said, we need to continue pushing forward with the reforms associated with the ease of doing business and reducing the cost of doing business. And number 3, of course, we have to bet on the local companies as well. We have to bet on our local small and medium enterprises. We need to do anything that we can to ensure that they continue to grow, that they're sustainable, and they can grow to a scale that they can be competitive at the global markets. So we're promoting export services, we're promoting technology and innovation, We are promoting a number of things associated with new business models, anything that is required for local companies to move and grow to the next level. I think that those three things are our major focus. And the actual challenge is, how do we do that in this new scenario during COVID and post-COVID-19 crisis, right? That is going to be the challenge. And the only way we can do that is, of course, is working together with all the key stakeholders. There's no other way. The government cannot do it alone. It has to be a true partnership and collaboration with the private sector, with NGOs, and of course, the academia and everybody. We're in this together. We have to do it, in true collaboration.
Yeah, I absolutely agree, Secretary LeBoy. We're actually going to talk a bit more about how we can better collaborate to strengthen and investment towards the island in a bit. But before that, there are several questions that came in. One for the Federal Reserve, one for Chelsea and Jason. I have a question here. How do you envision the long-term outlook for capital access, considering the current economic situation?
That's a great question. I mean, I think that depends on the economy. I honestly, I don't see why this would change that trajectory, really. The coronavirus thing is something that's affecting, everywhere. And if anything, Puerto Rico less than elsewhere. So, I mean, I don't see this affecting it. I don't know, maybe Chelsea, you want to chime in on this?
I mean, it's an interesting question. And I think it will have some level of impact. More importantly, I think what the pandemic has done is spotlight pre-existing issues in terms of access to capital. Again, particularly for low-income communities, for very small businesses. We're seeing the economic impacts of this pandemic play out in unequal ways, certainly, and impacting communities that were already at risk more acutely than communities that were better positioned in terms of financial security, financial resiliency. So I think what's important is that we take those lessons and we take these experiences and we figure out a way to have a more holistic approach to access to capital. I mean, the continued fragmentation of the private capital market will be an issue, has been an issue. Experts, particularly from a community development perspective, have spoken in intensive detail about the undercapitalization of the community development field. And I think we're seeing the consequences of that play out. So I really think we need to think about creative solutions and vehicles that more holistically connect various capital providers to each other. And building on the comments of Secretary LeBoy and Roderick Miller, the need to connect banks to CDFIs, to philanthropies, to local government will be absolutely critical. And we just need to solve for some of these issues. And I think there are some interesting examples that have come to fruition because of this pandemic. An example that comes to mind is the partnership between OFM and Google, the recently announced Eureka Fund that's being supported by Facebook and Salesforce, a portion of those funds, I believe, being specifically dedicated to Puerto Rico. But it's those vehicles that unify the public and private space and really work specifically to target those underserved communities, those underserved small businesses that are going to be really critical. And these are issues that we've known about for many, many decades, and that we haven't been able to successfully address. And if anything, we should use this pandemic to take a closer look at what we can do to solve for some of those issues. So, maybe it won't necessarily impact existing capital flows, but I think what we've learned is that existing capital flows are insufficient to address the needs of our communities.
Thank you, Chelsea. I have a question here that I'd like to ask first to Matt. It is a pretty simple question, but it's a loaded question. What is the silver lining in all of this? And I ask you, Matt, in particular, because you're very in tune with what's happening in Washington, and would love your perspective on this.
The best questions are always the loaded questions, right? Yeah, the opportunity in all of this. I look back at the hurricane seasons a few years ago where we had multiple locations that experienced significant devastation and economic distress as a result. And that prompted IEDC to have some really intense, in-depth conversations with the Hill, with Congress about what is necessary for an economic recovery. And we visited many congressional offices, including Puerto Rico's, and had some great discussions about what is economic development, what does recovery look like, should it not be the goal to not just rebuild what was once there, but to push the envelope and really take some potentially giant leaps forward that, if not for a crisis, would otherwise not be possible. And so the number one silver lining in this from a policy perspective is that we are having those conversations once again. And that is, we'll see what those benefits are of those conversations over how those play out over the next several months and years, really. But that to me is the biggest silver lining. And mostly in this particular instance, we're getting asked for ideas like never before, and that's one of the places that this medical equipment and pharmaceutical manufacturing initiative has come from. The folks on the Hill are overwhelmed by the scale of what's happening. And they're typically pretty open to suggestions and ideas about things, but unlike other times, they really want to hear from people about what could we be doing.
Thank you, Matt. Yeah, I think you're spot on. I think we want to be respectful of people's times, but I think there's one more question that I would love to ask the panel, particularly Rod and the secretary. Resilience is a buzzword. We know that it's a buzzword that we've been hearing it lately. It's a word that's been used to describe Puerto Rico, its economy, its citizens, and for good reason. Rod, you mentioned in your presentation underscoring the message of resiliency in all the efforts. How, you've worked in other places like New Orleans and Detroit that have faced similar challenges to Puerto Rico. How does Puerto Rico compare to these and other jurisdictions regarding resiliency?
I mean, I think Puerto Rico has a 400-year history of resilience, even from a historical perspective. I think the reality is that if there's nothing else, there is an energy around putting one foot in front of the other and continuing to be productive and continue to move things forward. And I think that's really at the heart of what Puerto Rico is all about. And as I mentioned earlier, this crisis really shows that any business, any region, any economy is acceptable to risk. And in this kind of environment, I think a place like Puerto Rico is particularly poised to actually, as awful as this is particularly poised to demonstrate its resilience and teach others about it. Whether that's making difficult decisions about staying home and social distancing, or whether it's looking at how to, or whether it's looking at solutions around the environment and how to make sure the environment is more, we're more thoughtful about investments in the environment and that sort of thing. So there are a variety of ways, that Puerto Rico's resilience has been demonstrated time and again, but I don't know that we've ever done a great job at telling others how they can learn from Puerto Rico's story of resilience. Puerto Rico is more resilient than pretty much anywhere in the hemisphere in terms of kind of the dynamics that it's had to manage over time. And I believe that's really the greatest opportunity to reposition it for strength moving forward.
Thank you. Secretary LeBoy, do you have thoughts on this? I know your day-to-day is working with companies here on the island.
Yeah, like I expressed before, I truly believe that if we manage this right, there are new skill sets and there are new core competencies that we are developing because all of the crises that we've been managing over the last couple of years. Probably there's very few places in the US and, for that matter in the world that has to endure all these crises in a short period of time. And we're still standing. right? So it's a matter of basically working together to translate that into actions, policies, strategies, that working together with all the key stakeholders, we convert that into the competitive advantages for Puerto Rico. And, I mentioned a couple of them, like, for example, healthcare, food. Puerto Rico, for example, we import 85% of all the food that we consume. There's an opportunity there. How do we apply technology and innovation, to traditional industries in Puerto Rico? Look at tourism, for example. Certainly tourism is one of the most affected sectors right now. How can we reposition Puerto Rico as a visitor's destination after COVID-19, as a place that is clean, as a place that is safe, as a place that, we know how to manage crisis, right? And we can, talk about renewable energy, sustainability. There's a number of things that, that Puerto Rico can be a leader, not only at the regional level, at a national level, but we have to play our cards right. And the key here is collaboration. The key here is to ensure that we have, all the key stakeholders in the same page and putting together, a combined effort to achieve those goals.
Thank you, Secretary LaBoy. So, before closing off the roundtable, we really want to address how we can work together to bring investment to the island and be able to kind of align all of these collaborative efforts. But we did receive a ton of questions, and we will be responding to them as a follow-up to the session. So please note that we are aware that we received a lot of questions, but we will get back to you after the conclusion of the virtual roundtable. But now I want to pass it on to Rod, who will talk to us about how we can work together.
Thank you so much. I mean, at the core of this, we do want to work with you. We see the private sector as vital. My philosophy has always been that the private sector really leads in economic development, and the role of the nonprofit and the government sector is actually to facilitate it, make sure it's inclusive, make sure it's sustainable, but it's really led by private investment. So we want to continue to leverage national and global relationships such as the IEDC, the Federal Reserve, and others to try and figure out how do we actually get everyone rowing in the same direction. So one of the things you need to know is what you can expect from us as an organization. Number one is that we're focused on execution. At the end of the day, it's about bringing new jobs and bringing new investment into Puerto Rico. And so we're going to be keenly focused on that. All of the work that we do is going to be around how do we actually create the buzz to drive new companies to the market so that there's a story and there's a narrative shift. How do we actually support companies in coming to the market and being successful in the market? And how do we create the environment? That's what Invest Puerto Rico does. So we focus on execution. We're going to continue to engage and communicate with you, whether it's webinars such as this, whether it's councils that we're launching, whether it's new reports and things that we'll be rolling out. There will be a sustained engagement and communication. And then last but not least, I think it's about transparency and accountability. We are a nonprofit organization with a public purpose and a public mission. And so in that spirit of working together, you will see that we are non-political and that we are going to share the information that we have to the extent that it's information that we're not allowed to share. We're going to share the information, and we're going to make sure that you know what we're doing, how we're doing it, and how we're performing. There are a few ways that you can collaborate with us, and one of the things I wanted to do was really acknowledge our C-suite. You've heard from Ella Woger, who is our Chief Operating Officer, who moderated this call. Michael Gay is our Chief of Business Development. So he is the key point of contact as it relates to new businesses coming to the market. Michael has 30 years of experience in economic development and is masterful at helping companies navigate the landscape of relocation and reinvestment. Albert Ruiz Picasso is our Chief Marketing Officer, who has about 20 years of experience in marketing. He spent a lot of his career with JetBlue and is really focused on helping to tell the story. So as you think about your stories of success and your stories that you want to get out there as the private sector, we want to tell those stories, and Albert and his team can help you do that. And then we've got Gail Nolan, our Chief of Strategy, who is focused on making sure that there's better data so that companies that are considering expansion, many times we've been cut out of processes in the past because there hasn't been access to information about the island. So Gail's focused on not only making sure there's better access to data information, but also on building strategic partnerships and encouraging strategic investments to strengthen our competitiveness. So we want to share information. We want you to share information with us about companies and partners that you need. We want you to communicate your stories of success. We will be reaching out to you over time and trying to figure out how we can work together. So we want you to please be responsive when we call, and we want you to consider us as your agency, as your partner, as it relates to issues of growing the economy. This is the beginning of a conversation, not the end of it. So we look forward to engaging much more about this. We will be having another event in the coming weeks, and we will share that information with you. That will be about sharing some of the perceptions. We just had a perception study done with over 500 CEOs from around the United States to understand how they thought about investing in Puerto Rico and what were their thoughts on the island as an investment location. So we look forward to sharing that with you in our next conversation. And thanks so much for spending this time with us today. Allah.
Thank you, Rod. I want to thank, all our panelists, for being here and sharing your perspective. I want to thank all the folks that joined us today. We hope you found this conversation productive going forward, and we hope to be able to collaborate with you all in the future. And as Rod said, please stay tuned for our next event, which is really going to be about understanding the perceptions, the external perceptions of Puerto Rico as a place to do business. And hopefully, we'll have some lessons learned and how we can translate those lessons into actionable, initiatives that will improve us attracting investment to the island. So once again, thank you. Thank you very much and have a great afternoon.